Hi, I'm Jimmy. In this video, I'm going to walk through 5 of my favorite high-yielding dividend ETFs that pay a monthly dividend. Now, this video is actually the second video where I look at monthly dividend ETFs. In the last video, I focused on larger ETFs in that they had more money in them, and that they also tended to pay a slightly lower dividend yield, call it 3 to 5 or 6%. I've got a link in the description below if you're curious. But for this video, I'm actually looking for higher yielding ETFs. Call it a minimum of 5%, ideally get us closer to 10%. Now, there's a couple of warnings that I think are important to consider with smaller ETFs or even very high yielding dividend ETFs. And that is first, that oftentimes these types of ETFs come with higher fees. And of course, none of us want to pay higher fees. And personally, I'm okay with the fee generally if it's not too high, as long as that particular ETF brings something unique to our portfolio. Now, given a choice of 2 of the similar ETFs, I think it makes sense to choose the one with a lower fee. That being said, if you happen to know of any monthly dividend ETFs that are similar to any of the monthly dividend ETFs that I talk about here, but they have better fees, please let us all know in the comments below. And the second thing to be aware of is that sometimes smaller funds get shut down. Since the fund manager makes their money based on the fee that they charge and how much assets they have in that fund, some fund managers may choose to close smaller funds. So we should be aware that it's always possible that that type of thing happens when we're looking at smaller ETFs or smaller index funds or whatever it might be. Now, if that does happen, it's not the worst thing in the world, since they would just liquidate the fund and we should get our fair value returned to us. So that fair value is likely to be very close to the price of the ETF at that time. So whatever the price is, they're going to liquidate it at, we're going to get that money returned to us as if we sold the ETF. Okay, let's jump into our first monthly dividend ETF, high dividend ETF. First up, we have the high yield ETF, ticker symbol HYLD. They have a dividend yield of a bit over 7%. They have about $125 million in assets, and they charge a higher fee of about 118 basis points. Now, this is a high fee. In fact, this is the highest fee on our list. That's why I'm starting with them. Now, what this ETF does is they invest in high yield bonds. In fact, this is a list of their top holdings. And just so we're all on the same page, here's how we can read this sort of descriptor. So LEE is the ticker symbol of the company that issued this bond. In this case, it's Lee Enterprises. This company pays a 9.5% coupon yield, and they mature in 2022. Then over here, the 2.1%, well, that's simply saying that for this ETF, well, this particular holding represents 2.1% of the overall portfolio. Now, if you're curious, HYLD has about 180 or so holdings within the portfolio. And like I said, they pay a decent dividend yield of a bit over 7%, which is why we might be willing to tolerate the higher expense ratio. And when we look at their dividend history, well, we can see it's been fairly consistent. And over the past few months, they've consistently kept it at about 20 cents per month. So I think that this type of bond ETF could be a good diversifier for many of our portfolios. Now, if this fee is too much for us, and in some people's mind it very well could be, well, for that we have the next monthly dividend ETF, which is called the iShares Broad High Yield Corporate Bond ETF. Ticker symbol USHY. They have a dividend yield of about 5.8%. They have about $4.6 billion in assets, and they have a fee of just 22 basis points. Now, this ETF has a similar style of investments, except when we look at their top holdings, well, here we can see that they target slightly lower paying bonds. You can sort of see that when we run down the line here. So it sort of makes sense that they would have a dividend yield in the 6% range. And when we look at their dividend history, well, once again, we can see that it's been fairly consistent. Now, this is the reason that I included both this ETF and the last ETF, is because they're both doing similar things, except we have this one with 5.8% dividend yield, and then the last one, which has a higher dividend yield. So depending on what we're after with a dividend yield, we might be willing to accept a higher fee if perhaps we're in a situation where we need a higher dividend yield. So they're both going after bonds, which I think broadly speaking belong in a lot of people's portfolio. Okay, up next, we have the Global X Super Dividend Emerging Markets ETF, ticker symbol SDEM. And as we might guess, this monthly dividend ETF focuses on stocks from the emerging markets. They have a 7% dividend yield, and they have about $20 million in assets, which is low, but like I said, I'm not too concerned about it at this point, simply because if Global X opted to shut down this fund, well, they would essentially just sell the underlying holdings and we would get the value of those shares back to us. But if that's a concern for some investors, I completely understand. And in that case, we should skip over this one. But for those that are curious, this is what their dividend history looks like. And as we can see, it's been fairly consistent, which is a good thing for us dividend investors. Okay, up next, we have another Global X monthly dividend ETF. They do a lot of them. But this time we're looking at their REIT ETF. REIT, R-E-I-T, is short for Real Estate Investment Trust. Their ticker symbol is SRET. They have a dividend yield of a bit less than 8%. They have about $540 million in assets, and they have an expense ratio of about 59 basis points. And as we might have guessed, they invest in REITs. And these are some of their top holdings right here. And these REITs have some tax advantages. All REITs have some tax advantages that generally allow for them to pay higher dividend yields. Essentially, they don't pay corporate income taxes as long as they pay out most of their profits in the form of dividends. So you end up with a very high dividend yielding ETF, which helps explain their almost 8% dividend yield. And when we look at their dividend history, well, we can once again see that they've been fairly consistent, swinging ever so slightly around the 10 cent per month mark. Okay, next up we have the Global X NASDAQ 100 Covered Call ETF, ticker symbol QYLD. And as we can see, like I said, Global X really focuses on monthly dividend ETFs. They have an impressive dividend yield of about 9.8%. They have about $1 billion in assets, and they charge an expense ratio of about 60 basis points. Some of their largest holdings are companies like Apple, Microsoft, Amazon, Alphabet. Now you may notice that they actually have Alphabet here twice, and that's because this ETF owns both Class A shares and Class C shares. Okay, now the way that this ETF is able to pay such a high dividend yield is because they sell call options on the shares of the stocks that they own. So they buy these top companies and they sell covered calls on them. And as we could see with their dividend history, well, it's been fairly consistent for the past few years. And the good news is that even if the price of some of these companies were to fall, well, it's possible that the portfolio managers are able to generate consistent dividend-like income by selling covered calls. That's why some investors really like selling covered calls, because it allows you to sort of generate extra income, which in this case produces a much higher dividend yield. So even if some of these stocks don't pay dividends at all, well, Global X is essentially able to manufacture dividend-like income by selling covered calls. The flip side of covered calls, the negative side to it, is that you could restrict your upside, so you might not get as much capital appreciation. Now, I actually did a video that I walked through what call options are and how to use covered calls and why people might use them and how to generate dividend-like income from them. Even if the company pays dividends, we could manufacture additional dividends. If you're curious, well, that could be a good next video for you to watch. There's a link right here. There's a link in the description below. And I really want to thank you for sticking with me all the way into the video. I hope you found this interesting. Thanks, and I'll see you in the next video.